I'm very bullish on gold. I do think we're going to see 2250 to 2300 this year. I do think silver, could really outpace gold.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is Bill Baruch, the president of Blue Line Futures. Bill, thank you so much for joining us today.
Thank you for having me on, Elijah.
Definitely. Now, I wanted to discuss gold and silver because we've been seeing, as we often see at this time of the year, the end of the year and the start of the new year, a rally in gold and silver. If you could take us through this, do you think this is more than just a seasonal trend?
I do think there's definitely a seasonal trend here, but I think it also comes on the back of seasonal weakness through August and September, and that played out perfectly this year. We advised a lot of our clients to just really take it very slow with gold and silver through into November. And then one of the things that in commodities is you have contracts that expire in different months. For gold and silver, they both expire as December contracts, which means they fall off the board at the end of November. This allows a little bit of cleansing, and then people can reposition, and it gives a sort of a fresh wave. And that, I think, all lines up with the seasonality to start the year.
Definitely. Now, can you, share with our viewers a bit more about this fresh wave that you're talking about?
Yeah, and that's something that we detailed pretty well in our notes to clients as it was happening, and also in anticipation of it. But to start off, you have options expiration, gold and silver options expiration. I don't remember the exact day, but say November 25th. Right, it's sort of around that 25th day of the month each year. You get that options expiration, and really, options can really make a market tighten up a bit because retailers and speculators are the ones buying the options. The professionals are the ones selling the options. And really, when they want to see volatility contained, that's how they make their money. So when we go into options expiration, the people who are buying options have the higher, what hurts individuals the most? That's how markets move. Who does it hurt the most? And then you see the volatility sink out of that. And then when that market then moves through that options expiration, it went to 1,800. 1,800, a big round number, a lot of open interest. People who had 1,800 calls didn't make money. People who had 1,800 puts didn't make money. Once we got through that options expiration, we went into the futures expiration, which is the second last day of the month. And then that flushed out. So everybody who was long gold, you're seeing selling of gold because you have to get out of the contract, encourage that flush after the options expiration. And then ultimately, we call that a cleansing. So anybody who held gold through August, never took profits, never locked anything in, sort of got cleansed through that move. And now, once that's over, it's sort of a fresh look. Buyers can now step in, and lo and behold, that was the low of gold at the very last day of November into the first day of December. And so we've seen a steady move higher since then.
So you remain bullish on gold right now?
Absolutely. I'm very bullish on gold. I do think we're going to see 2250 to 2300 this year. I do think silver, could really outpace gold. And one of the reasons I think today, just alone, or on Tuesday, you have the ISM manufacturing number. And that ISM manufacturer was a blowout read. I mean, historically, better data in the U.S. increases the U.S. dollar. We're not in those times, really. I don't think that's going to change. It didn't really happen in 2020. It's more of a focus on the printing and the money supply, et cetera, that's hurting the dollar. So even though the dollar is not recovering off that better number, it does hold gold back just a bit. But I think it's supportive to silver and industrial use for silver and things like platinum. And that type of move, which also correlates with inflation, is going to be very supportive to silver and platinum, but as well as gold through 2021.
Definitely. And we had your colleague Phil Striebel on the other week, and he was talking about how, he's more bullish on silver than gold. Can you kind of expand on why it seems like, you're more bullish on silver than gold right now?
Yes. One of the reasons, the easiest reason to point out is as inflation picks up, the yields of the treasuries rise. And rising treasury yields are going to hold back gold, not so much silver. Now, silver is tethered to gold, which is then tethered to that. But I don't really expect the rising 10-year yield, which I do think can get to 1.25% before it's said and done here over the next couple of months, if not sooner than later. I think really, though, the reason that is going to 1.25% is the massive supply of treasuries that are needed for the debt, the U.S. debt and fiscal stimulus that's being done. So because that more supply is tied to stimulus measures, it's really not going to just sink gold. Gold has been able to capitalize because there's more, it's focused on the stimulus and the weaker dollar, but it can hold gold back. And that's why I think silver can outperform, because it also has those industrial uses as that fiscal stimulus goes to work.
Now, with respect to that, kind of the fiscal stimulus, do you see, I mean, there's been so much talk about that in Washington, like continuing it or not, and there's been a lot of controversy with respect to that, and people don't know, is it going to go through and stuff like that. What is your perspective in 2021? Is there going to be more stimulus or not, and how is that going to affect things?
That's a really terrific question, as we go through the Georgia elections right now, too. So I think that we are going to see more stimulus. I think that this is just the start. And President-elect Joe Biden, he's using the same narrative just a couple weeks ago that President Trump, had used for his entire presidency, and it worked so well. It's sort of leading the market on, and he learned how to do that very well. And Biden just did that 2 weeks ago, saying that he's going to come in. This is just a down payment. This fiscal movement is just a down payment on more measures to come. So as he leads the market on and follows what Trump did there, I think there is going to be more fiscal stimulus. I think it's going to be talked up in that manner. So I think it's going to be very bullish for the metals and overall the risk assets in general as we look through 2021. But it also creates inflation. So I do expect there to be a little bit of a point where we see inflation expectations pick up, which they already are, and that's going to come to a headwind at some point.
And how do you see the strengthening yuan impacting the gold market?
And that's another great question, too, is really the fact that the Chinese yuan has increased in value steadily, since bottoming out this past year. But it started the year as well with the bang. China, in their 5-year plan, is made a promise to basically hoard and increase their supply of metals as well as agriculture products. And with that, the Chinese yuan is increasing in value. They're able to buy more of that. For the last at least 2 decades, you've seen China buy up land, especially mining capabilities in Africa and South America. Now they're actually buying the real commodity, and they're going to hoard it. So look at the move we've seen in soybeans recently. It's going parabolic above 13 cents, looking at $13, looking at $14. And you've seen the similar moves in the metals. This is China buying, and I think it's going to continue. I think it's going to be a theme throughout 2021 and in a couple of years to come.
And as we see all of this going on, even more bullish fundamentals for gold. And one of the things that a lot of people have argued is one of the main drivers of why we've seen gold rally so much is the weakening dollar. Can you kind of expand on that as well, and how do you see it continuing to weaken, and how will that impact gold?
Yes, I do think the dollar is going to weaken through 2021. And we could really be starting to see a multi-year downtrend when currencies move through and they start trending. They move through years. It's not just a 6-month move. And I think that we've broken a good downtrend in the dollar index, and we're facing a good downtrend in the Chinese yuan at 0.156 in the yuan. I think the dollar is going to take a little bit of a breather at some point, and that's why you don't want to chase it around. But by the time this year ends, I think the dollar is going to be a lot lower, and it's going to be lower for years to come unless something changes. Now, we've talked about inflation. The real question is does inflation rise to a point that the Fed has to address inflation? Right now, their expectations for raising interest rates really are now to 2023. And I don't expect them to raise interest rates, of course, in 2021. There's still a lot of questions behind COVID, and more stimulus is needed. But it may cause them to move up the timeline in which that the markets are projecting them to raise interest rates. So there's going to be, nothing moves in a straight line, but the markets want to price things in as quick as possible. And so there's just different narratives that people have to pay attention to. You don't want to just be short the dollar with no risk, management, or be long gold with no risk management. I mean, you see how just, I guess, a great way to put it is gold's move in August. It fell back, and we're back to 1950. If you didn't manage your risk, you could have been washed out or cleansed, at different times.
Now, what about the whole COVID situation? Because obviously that was a big surprise last year, and it had a huge impact on the economy. It seemed to be one of the things that really drove gold as well and drove down the stock market. And we've already seen further shutdowns around the world and around the United States. In England, there's this variant of the virus that's now seems to be, it spreads more easily, right? It's what it seems to be, and it seems to be causing the spike in the virus in England. They're shutting down England to about mid-February. And the worry is not so much that the vaccine wouldn't cover it, but that we could see this spike around the world as well if the variant gets out? I mean, we've seen different cases where actually the variant is in the United States now. But how do you see this whole COVID situation, especially with this new variant kind of playing out in the, the first half or so of 2021?
Well, I want to address it first to point to some of the things we've already discussed and the weaker U.S. dollar, because that's tied to the need of more fiscal stimulus, more monetary stimulus, and rates to stay ultra low. So as the Fed and Washington work to really make the U.S. dollar the sacrificial lamb for the economy during the pandemic and after the pandemic, which we're still in right now, that's supportive to the metals. Now, on the other side of the coin, if there's lockdowns and upping of state and local restrictions, that's a deflationary event too. So there's two sides and that's exactly why you want to be able to manage your risk properly, looking out for how these markets play out. And this doesn't change my trajectory for gold or silver, which silver, by the way, I'm looking for $35 this year. But if these lockdowns do occur, it's going to be a little more volatility to get there. I think you just got to plan for such. But in the end, the same way we've seen the aftermath where gold and silver, or at least gold, really ran up to new swing highs ahead of the March 6th, and then it fell out pretty sharply. There's going to be moves like that if we see further lockdowns. And that's just the real question, what may happen from there. The UK announced a 6-week lockdown. Germany, it's extended extensions by another 3 weeks here. And California continues to be in the headlines. New York is as well. So what happens? I don't think the U.S. is going to take such drastic measures as we've seen broadly in the past. But we never know. And those are where the headwinds for the metals in the near term can come. But when those happen, it's really where you want to focus on. And as the markets, especially the equity market, is focused on all year, is looking out to 2022, the second half of 2021. And projecting where those earnings are going to be, where's the dollar going to be, and what kind of stimulus is needed to be there. So in the long run, don't take your head away from where the bigger prize is and seeing gold higher, but it's going to create some volatility to get there if these lockdowns continue to happen.
It is interesting how we're seeing the stock market at all-time highs again, and it's like, well, we're amidst this pandemic, and so why do you think that is? Are they kind of looking to the long run and seeing, the vaccine's here, things could go back to normal? What is your perspective on why the stock market is back at all-time highs?
Well, we look at the stock market broadly, and ultimately, or whenever he quotes it, it's the Dow, or it's the S&P, it's tech. It's not so much all the time of what different sectors have done. And I mean, crude oil is down more than 20% last year. So I mean, you're seeing airlines and other stocks and energy stocks as well as but cruise lines, all this, the travel stocks, they're still down and they're not at record highs. The stocks that are record highs are the mega techs, mega caps, and the big techs, and there's reason for those to perform. Because we've shifted our way of life and e-commerce, and things like that are also become, as technology innovates, become appealing for metals. Look at silver and platinum. Going to be tied to electric vehicles and the crave for rare earths in order to for energy consumption and staving off the climate change and whatnot. So there's always new innovations that are going to be that are going to stand out within. So when you look at the S&P 500, I mean, the stocks that are performing are again, there's the mega caps, the big tech, and just in different sectors that have recovered through the pandemic much better than some of the others. But broadly, not every single stock is at record highs. So you have to look at it. There's 500 different companies in the S&P 500.
That's a really good point. And sometimes, it can be kind of misleading if we just look at the one stock index. It's all at all-time highs. Well, it's a bit more complicated than that, right? As you mentioned. Bill Baruch, thank you so much for joining us today. Before we let you go, I guess any last thoughts you'd like to add, and where can people find you online?
I think the best thought is just manage your risk and really size your positions properly. At the end of the day, you could be a poor trader and still make money in the markets. It's just a matter about knowing when you're wrong. It's okay to be wrong. It's not okay to stay wrong. Don't oversize your positions, take on too much risk, ahead of volatility. Those are some of the most important things that are out there. You can find me at bluelinefutures.com. That's our futures and commodities brokerage firm. We put out a note every day. We put out videos every day, notes covering everything from the S&P and NASDAQ, of course, the metals, gold, silver, but everything too from soybeans and corn to soft commodities and FX. We also put out videos daily. You mentioned my partner, Philip Strebel. He puts out stuff too. So we put out a lot of content out. I encourage you to check us out and sign up for a free trial of our research. It goes out 14 days. Check us out, and any questions along the way, we're here to help.
Fantastic. Bill Baruch, thank you so much for your time, and God bless.
Thank you.